My name's Edward Beaver. I'm here with Darren Weir, an independent financial advisor, to talk about inheritance tax and wills. Darren, can you tell me more about inheritance tax, please?
Okay, inheritance tax, or IHT, is essentially a tax that becomes payable upon your death. And upon your death, your total worldwide assets are brought into your estate and are assessed for inheritance tax purposes. Okay. HMRC will give every individual a nil rate band of inheritance tax, or a tax-free allowance in essence. But once you exceed that banding, tax then becomes payable. There is no no inheritance tax payable between legally married spouses and civil partnerships, but it doesn't actually cover cohabiting or common law spouses. Any unused allowance from legally married spouses or civil partners can be transferred automatically upon death to the surviving spouse.
Tell me, Darren, are there any ways that I can mitigate inheritance tax on my death?
Certainly are. Two surefire ways to mitigate inheritance tax. One would be to spend all of your money, and two would be to gift all of your money away. But of course, if we do either of those two things too soon, we could find ourselves in trouble because, of course, we don't know how long we're going to live. If you do decide to gift any of your assets, capital, or property away, there are certain limits that the revenue give us each tax year. If you exceed these limits, then the assets would be classed as a potentially exempt transfer. Okay, and this governs your survival for a 7-year period after the gift has been made. And if death should occur within the 7-year period, the tax could be reduced on a sliding scale.
And can you tell me what happens after the 7 years?
Okay, so after the 7 years is up, any asset, capital, or property that you've gifted will fall out of your estate for inheritance tax purposes. One caveat to that is that the gift should be an absolute gift. Therefore, upon gift, you should not have any further benefit from that item of capital or property. Otherwise, it could be deemed as a gift with reservation and would not be excluded from your estate upon death.
And with regard to the relevance of inheritance tax planning, should I have a will?
Absolutely. A will is a very, very important part of your inheritance tax planning, and it's the only way that you can ensure that the capital or property that you own is passed to the people that you wish upon your death.
And with regard to making a will, have you got any idea of the approximate the cost would be for making one?
Okay, approximate cost for mirror wills would be around £200 to £300. Okay, which is a relatively small amount in the greater scheme of things of a sizable estate. There are also some free will incentives around the country, such as Free Will Month and Will Aid. This will allow you to have a free will written by a will writing expert, and they would expect you to make a donation to a charity of their choice.
Can you advise me who my executors should be?
Okay. In my experience, the best people to be executors would be the beneficiaries of the will, because nobody is going to have more of an incentive to settle the estate quicker than the people that are ultimately going to receive the benefits of the will. If you have approached a bank or building society, solicitor's practice to write the will for you, they may insist on being executors. Okay, and as executors, they're quite at liberty to put a charge in place for distributing the estate, which could be quite costly. The important thing to remember is that executors can be beneficiaries, but beneficiaries can't be witnesses.
I understand.